Hello and welcome to S&P Global Ratings Fixed Income in 15, a 15-minute chat with a market voice and an S&P Ratings analyst. My name is Joe Cass. I head up market outreach in the UK. I'm very fortunate to be joined by two financial heavyweights on the show today, Anthony Scaramucci, founder and managing partner of Skybridge Capital, and our global chief economist, Paul Gruenwald. Thanks for joining me today, Anthony and Paul.
Good to be here. Great to be here.
So, Anthony, let's start off with some questions for you. It's fair to say that you've had a diverse career thus far, spanning politics, finance, events, media. You're also a restaurateur, joint owner of the Hunt and Fish Club, which is a steakhouse in Manhattan. Today, we're going to focus on finance with a little bit on events. So what has been your experience at Skybridge Capital over the past few months?
Well, no, listen. We got hurt. I mean, we were down about 24% in March. We've rallied back about 9% now, so we're down about 17.6 on the year. But unfortunately, I'm tied to a lot of retail wirehouses, so we had some redemptions come in as a result of that performance. The flip side of it, though, is if you really study structured credit, which is where we live and what I have studied for the last 32 years, I think there's huge value there. And I think as the economies improve, there'll be a lot of upside opportunity, very similar to what happened in the 2009, 10, 11 period of time where these securities recovered. But unfortunately, I do business with a lot of retail investors. And so what they have a tendency to do is sell at the bottom and then they buy highs. And I think that's a mistake. But we try to condition people not to do that. But that's the world that we live in. So our assets right now are down, but it's still a reasonably healthy, very successful company. We have $6.9 billion in assets under management, and that will be, to me, I think a growth story from here. But if you were talking to me on January 1st, we had $1 billion more in assets under management, and so it was a painful 4 or 5 months.
As a fund of funds manager, Skybridge invests in hedge funds on behalf of high net worth clients. What kind of traits do you look for in an astute and ultimately a successful hedge fund manager?
Well, I mean, I want to define it a little bit more narrowly. So we're primarily a fixed income fund of funds, and so we do have small tranches of equity, but about 75-ish% of our mandate has always been in the fixed income space. And so we've always found that there are higher yields and greater predictability in structured credit. And in the 15, I'm 32 years in our industry, but in the 15 years since we founded Skybridge, we've had two blips on our computer screens. One was the global financial crisis in '08, and one was literally a concentrated, felt like a global financial crisis in March of 2020. Over those 15 years, though we've had very, very good returns, we've actually outperformed the hedge fund industry and the hedge fund of funds index. So both the individual standalone hedge fund index and the fund index over the 15 years. But if you looked at our record after 5 years and you played performance musical chairs and you stopped the music on March 31, our record is not great. But I'm hoping that this will be an opportunity now. But what am I looking for? I'm looking for guys that are in the predictable cash flow business. And we're trying to get a high single digit return for our clients with a lot less volatility. The meteor strike of COVID-19, frankly, we were not prepared for. I left a meeting at the World Economic Forum in January after meeting with a World Health official and two pandemic experts. I thought that we were going to contain the virus in Asia. I didn't think it was going to make it to North America. That was my mistake. It turned out that it was the movie starring Matt Damon and Gwyneth Paltrow, Contagion. I thought it was going to be more like MERS or SARS, and so we got caught off guard. But I do believe we own very good fundamental securities, and so over time, this stuff should trade back to its intrinsic value.
Anthony, it would be interesting to get your thoughts on financial markets more broadly. What is your outlook for the markets and maybe specifically on the credit side of things?
Well, credit has already moved. The Fed has already inducted a lot of narrowing of spreads. The reason why structured credit has not moved is that people are very concerned about high potential eviction rates, delinquency rates in mortgages. The commercial mortgage-backed space has been hobbled by this because we're all working from home and people just are now starting to think that they may need less commercial real estate in terms of their footprint than they did prior to the COVID-19 crisis. So lots of trends are accelerating that are going to potentially hurt suburban and rural real estate and likely some inner city real estate. So to me, I think that there's going to be some transition there, which I'm cautious about. But I think in general, once we get to the other side of this and there's a vaccine and the economy opens up, you'll find very similar to the 1918 pandemic, a lot of pent up consumer demand. And remember, we left the First World War and the Spanish flu pandemic and had a decade of great exceptional growth. And there's a lot of technological changes that we're about to onboard as well.
Paul, this seems like a good time to bring you in. Your team of global economists have been pretty much front and center at the crisis. Are we now at the stage where we can talk about recovery? And if so, what could that recovery look like on a global scale?
Yeah, well, first, maybe start a little bit with the downturn. As Anthony just said, this is a bit like the 1918 global influenza. The economists don't really have a toolkit to deal with that. So, we were all caught a little bit off guard, and we know that the hit is one, fast, and two, enormous. So we saw from China, then Europe, then the US, we saw 30 to 40% declines in GDP at annualized rates. And, now it looks like we've hit the bottom in the advanced countries in China. But as we rebuild, we're seeing how difficult it is because we get these mini waves and the social distancing seems to come off and then it goes back on again. So we're looking at a multi-year recovery. It's going to depend on the vaccine. We're not epidemiologists. We're kind of taking the consensus view that sometime, hopefully in the first half of next year, we'll get a vaccine. But, as we look at the macroeconomy and we look at the sectors, it's going to be very uneven. It's going to be mostly services, mostly person to person. Some sectors like tech and parts of financial services won't do too badly, but anything, restaurants, entertainments, airlines, that sort of thing is going to get hit hard. But it's not going to be a V. We originally had some folks talking about a V-shaped recovery, but just to give you an example, our U.S. team doesn't see us getting back to full employment until 2022 or 2023. So even with a vaccine and kind of a good or improving health outcome, this is going to be a multi-year slog.
As an agency, we've been very engaged with the investment community over the period of the crisis. One question I'm personally asked all the time is, how does this crisis compare to previous financial crises? So it's obviously a unique situation we're in right now. But Paul, how would you go about answering that question?
Well, I mean, each crisis is different. They sort of rhyme. So, there's this famous book by Ken Rogoff and Carmen Reinhardt called This Time is Different. And it's kind of making fun of the idea that this time is different because we usually get some banking stress, some credit stress, a deep downturn, etc. But now those guys are going around saying this time actually is different, right? We had the big hits of services and, person-to-person activity. So we didn't get the traditional kind of, stop in investment and production. That did stop, but it's not taking the biggest hit. And unlike the global financial crisis, the banks weren't hit directly. They're getting hit indirectly, but there's going to be less damage there. So coming out of this, I think what we should be watching is a couple of things. One is how much output did we actually lose? So if you think of the economy as going along a path, a pre-COVID path, and we were in pretty good shape coming into this, typically economies lose some output during a recession. So we're on kind of a lower but parallel path. But the real question is, what's going to happen to post-COVID growth? Are we going to be the same as pre-COVID? Can we amp it up a little bit with investments in infrastructure and green technology and maybe some review of competition? So in the long run, the real thing that matters is productivity growth. So are we going to be able to capitalize on some of the cooperation we're seeing and get some, some good policies to get growth at or above where we were going into this? If we can do that, then we can handle some of the higher debt and some of the other excesses we're going to have to work off. But again, that's going to be years rather than months or quarters.
Now we're going to move on to some non-market related questions. So Anthony, in addition to Skybridge, you're also the chairman of SALT. So it's one of, if not the largest hedge fund conference series in the world. Your events bring together speakers from finance, entertainment, government, and it's hosted over a 3-day period, usually in pre-COVID times in Las Vegas. I took a look at the speaker list. I mean, President George W. Bush, David Cameron, Mike Tyson, Will Smith, Sir Richard Branson. I mean, it's a really eclectic and impressive bunch. So how did the conference sort of originate, and who have been some of the most interesting speakers in your opinion?
Well, it originated as a direct result of the global financial crisis in 2008, and I'll take you back to March of 2009. The markets were at a low. The S&P, your index, I think was about 666 on March 9, 2009. President Obama was telling people not to go to Las Vegas. Anybody that was a recipient of TARP money, he told them not to go to Las Vegas. And so there was a series of conferences that canceled in the city of Las Vegas. And so I looked at that and said, okay, this is an opportunity for us. Let's create a thought leadership event and see if we can fill the vacuum, because even though we're in a crisis, people need this level of communication and networking, and if we can offer up something they can learn, potentially meet new people and have some fun. It is Vegas after all. Maybe we can get something started. So that was March of 2009. We did the first conference in May of 2009. We did it 10 times in Las Vegas, twice in Singapore, once in Tokyo. And last December, we did a SALT conference in Abu Dhabi, which was very successful. We had almost 2,000 delegates at the Emirates Palace Hotel in Abu Dhabi. But here's the thing. I had it set up for March and May. I couldn't do it. We're now having a series of SALT talks, and we're bringing that very same group of people together over the internet, basically linked up through Zoom or OpenReel, things like this. Uh, it's fun. We get a lot of people. You would be blown away at the turnout. I had Chief of Staff Kelly, who fired me from the White House, has actually become a very close personal friend of mine, and so I had him at our SALT conference in Vegas. I had him in Abu Dhabi with me, and we did a SALT talk together virtually. We had over 70,000 people live listening in. Can't really get that in a ballroom in Las Vegas or Abu Dhabi or Tokyo.
Yeah, sure. Very interesting. Huge stats. Paul, moving to you. You are a huge cycling fan. You're an avid cyclist. I saw you recently topped the S&P Global Velo team, the weekly leadership board, for the longest ride at like 132 kilometers in one go. So it's like 80 miles to me. So you cycled all over America. What are some of the best routes you've taken and why?
Yeah, well, first of all, I can't compete with the 70,000 that Anthony just said. We launched a cycling club in S&P Global earlier this year, S&P Global Velo, and we've got about 50 cyclists globally. So it's tough to get on the podium, right? The podium's the top three in either distance, climbing, or longest ride of the week, and we've got some, stronger, younger guys. Riding's fun. I mean, you can get good rides anywhere. Maybe the one thing to share with the audience is there's actually very good riding right outside of New York City. I went to school here a long time ago, and I didn't really know this, but if you go up to the George Washington Bridge, which is about 10 miles up the road from where I'm sitting now, and you cross over, you've got some beautiful cycling. There's a huge cycling community out there. You see a bunch of, middle-aged financial sector professional guys on pricey bikes running around there on the weekend trying to stay in shape. But it's been a great way to keep fit and keep some mental balance throughout all this this COVID-19 crisis. It's actually been kind of a blessing for some of us to be able to still do that in New York and get out and stay fit and have some fun. And when things get back to normal, we'll do some charity events around that for the company as well.
So, Anthony, you briefly featured in the movie sequel to Wall Street, Money Never Sleeps. I saw one of your books. I'm reading one of them. Another one is called Goodbye, Gordon Gekko. So how big an effect did the original Wall Street movie have on you? Do you ever rewatch it?
Well, I mean, so what happened to me, I was a commentator on CNBC, and so Oliver Stone actually called me and asked me to review the script for Wall Street 2, and so I was very flattered by that. At the time, I had no Hollywood experience, um, and I was writing a manuscript. I was writing a book, and I handed him my manuscript, and he handed me his screenplay, and then we met at a, restaurant, down in the meatpacking district, and we sat there, and he said, "Listen, I got a great title for your book. Let's call it Goodbye, Gordon Gekko." And he actually came up with a subtitle too, "How to Find Your Fortune Without Losing Your Soul," after he had read the manuscript. And so I had read his screenplay, and then he asked me to play myself in the movie. I said, "Okay, that's a lot of fun." And then I ended up going to France with these guys for the premiere in Cannes, which was even more fun. So that's been my entire Hollywood existence, if you will. I haven't done anything since then, but point being is that the early movie did have an impact on me. I remember going to the movie, watching the movie, Daryl Hannah, obviously Charlie Sheen, and it was a cautionary tale about greed. And my point about saying goodbye, Gordon Gekko, is we really need to, if we want Wall Street to be sturdier, it needs to be less transactional and it needs to be more relationship driven.
So, final question goes to you, Anthony. You've built up a huge Rolodex of contacts or contacts across multiple industries in your career. So, what tips or hints would you have to young professionals on how to build a strong network?
I would tell younger people is the aphorism that Ben Franklin came up with 240 years ago, which is if you want to make a friend, ask a person for a favor. It's counterintuitive, but if you do that enough times in your life, the reciprocity gene, if you will, kicks in for people, and they start going out of their way to help you, and then you have the opportunity to help them. And before you know it, you're building a pretty large Rolodex. And the most important thing, and I really believe this more than anything, be a non-linear person. Don't look to be this transactional person where you're always searching for a quid pro. Just go do what you think is the right thing to have happen. And what happens is you get an enormous amount of people that get attracted to you. You don't want to be the guy when you're falling off the ladder that there's no one there to catch you. So you got to be nice to everybody. That's my message to young people.
Well, thanks to Anthony and thanks to Paul for both your time today. Thanks for watching and see you next time on Fixed Income in 15.